Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at natural gas on the daily time frame to start, and the bulls bought the dip today, but as long as we do not break 3228, the bears remain in control of the daily time frame. I keep pointing out that level because it's very important. If the bulls want to break the lower high pattern, they have to break that resistance. So as we head into the inventory report tomorrow, pretty much a bullish reaction and we likely break that resistance, and a bearish reaction and we're heading back down to $3 psychological support. So the bears remain in control until that occurs, and on the hourly time frame, we can see after a pretty big pullback early this morning, we established support at 306, and then the bulls showed up in a big way. And what stood out to me this morning, look at the bear volume, and then look at the bull volume on the first reversal candlestick, multiple times any candlestick of bear volume leading up to it, and then big time follow through. So it's the volume that lets you know the power behind a move. It's almost like a trust gauge. Can you believe the candlestick and what's forming? And when you have a big volume move behind it, then it does become more trustworthy, and you know the bulls have a lot of follow through. So nice bounce and recovery for natural gas, but still a lot of work to do, and I'm looking at that resistance of 3228 in order to break the lower high pattern on the daily time frame. But the bulls did establish a new support level above $3, and that's 306. We can draw a trend line to be keeping an eye on, but it's all going to come down to the reaction to the inventory report tomorrow. The weekly time frame, the bulls are trying to buy this dip, form a bullish reversal candlestick again, and a lot of choppy action. Again, red, green, red, green, red, green. Past 6 weeks, we have not seen 2 weeks of conviction in a row. Looking at UNG on the daily time frame, so a nice green candlestick, but it's just another lower high until UNG can break 803. And a bullish reaction to the inventory report, we likely see a move to 803, and a bearish reaction, we're looking down at 757. Same thing with the weekly time frame, trying to regain the 50-week moving average resistance of 787, but the bears currently in control until the bulls break that lower high pattern. And we're still struggling with exponential resistance here on the daily time frame. It's rejected both bounce attempts in the past 2 weeks at this point. So by no means are the bulls giving up. There's no dump. There's nothing like that. We are building some supports on the way back up as we're heading to this key resistance, and we'll see what that inventory report reaction is tomorrow. We'll check back in then, and I will see you then. Thanks for watching.